Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have our live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first Kinderspiel. Welcome to the broadcast. Again, for those of you new, we trade stock and options on this broadcast using our AI algorithms. My background is technology, building neural networks and signals. I've been managing my own money for the past 15 years. And then we have Keith from Options Hotline, who has a lot of extensive knowledge in options trading as a market maker, part of the hedge funds. So that's what we do here. And we're using these models to trade in live trading room. So this is the live trading room broadcast. If you're new and you see these disclosures the first time, very important to visit the link optionsclearing.com on your screen to understand the risk and suitability associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Before market open, again, very important to have a trading plan and a trading journal. In trading plan, I would concentrate on things that are within your control to avoid trading based on emotions, right? And avoid large drawdowns in your account. How do you do that? One rule is in my trading plan, I would put down what your cash level should be in your position. I propose on average 30% of your portfolio in cash. If the market is overbought, then maybe you increase your cash. If the market is oversold, then maybe you decrease your cash and you deploy your cash to buy stocks or options. Portfolio drawdown is the risk, right? How, the what if scenario. If the market drops 10, 15%, 5%, what will my portfolio look like? Robert, good morning. How are you? So for that reason, I think, especially if you're new to trading or if you're managing a smaller portfolio, I would start with 4 positions and not risk more than 2.5% of account value per position, right? So then this way, your maximum drawdown is 10%, right? So in the beginning, start with 4 position, maximum exposure 2.5%, and go through multiple cycles, maybe through earnings cycles, to get more. Happy Friday, Russell, welcome back. Feel a little bit more comfortable, and then once you feel more comfortable, then you can have maybe 6, 8 positions, maybe instead of 2.5%, maybe it's 2%, maybe it's 1%, but that is the most important rule to keep in a trading plan and in your journal. And then when you place a trade, you go through the checklist, you add a checklist into your trading journal, and then you grade yourself, right? If you didn't break any rules, in your position was never down more than 2.5%, then you give yourself A and B based on the outcome of this trade. And if on any of the positions you were down more than 2.5% of your portfolio, then you would grade C or D, right? But position size is the most important exercise, is the most important task. I would document all your trades along with position size and why you got into a trade, and then grade yourself. And the goal is not to have C's and D's, right? All right. How do you determine 2.5%? Let's look at the model. If you look at the stock forecast toolbox, we had FOMC meeting on Wednesday. No new news, right? No new news is usually good news. Geopolitical risk, Middle East. I think it's it could escalate, de-escalate. For now, Model C is basically neutral reaction. We've been trading around 600 level, right? In terms of positioning, options and futures data, we've seen an SPY, SPX, acts as a magnet for now at this SPX 6000 level, right? So the idea is after today's expiration, right? We have a pretty large expiration today. Expect market volatility to pick up. VIX was 22, dropped to 20. So the market is probably going to be volatile today. So then the question is, as we're going into the next earnings cycle, are we going to break to the upside or are we going to break to the downside? Right now, model doesn't see any momentum to the upside or to the downside, basically saying we're going to be trading at this narrow range for 10 days. I probably don't agree with the model. I think we will break out in the next 10 days, but we'll see. For now, it sees, maybe 595, 590 is your support, and maybe 600, 605 is your overhead resistance. Very narrow range. If you look at the gamma exposure, right? Let's look at the gamma, the positioning data. Even if you're a stock trader and you don't care about options, this positioning data is very important because you want to kind of see what other people think, right? How other people are positioned, and that will drive the market. As we can see, gamma flip is still at 5,900. So the red basically means that as long as we are above 5,900, dealers are forced to buy. Dealers are forced to buy and providing stability for the market, right? We start seeing large positioning at 6,100, right, after the 6,000. So 6,100 is probably your overhead resistance at this point. But you can see as of right now, most of the contracts are concentrating at the 6,000 level on SPX. If you remove June 20, right, and you just concentrate on next week in July, gamma is growing, right? 22 billion, but still nothing like June where it was 130 billion dollars. So the gamma is increasing, but still less. So a lot of contracts will expire today, and then July people are repositioning for July. And for now in July, it's still same picture. Most of the contracts are heavily concentrated at 6,000. I mean, that's where the market is trading. And the next level is 605, 6,100. So let's say you're bullish on the market, right? So we've been basically for the past, since May 19th, we're flat on the market. So kind of didn't go anywhere. So then the question is, let's say you're bullish and you think, situation in the Middle East will resolve itself in the next week or two with a positive outcome, right? Interest rates are not going anywhere. Earnings are still decent. Last few years, from seasonality point of view, June, July has been bullish for the market, and you think we can revisit at least the highs, right, around 610, 620. How much money are you willing to risk? Right now, we're trading right above 590. Right, so we said 590 is your first support, right? If you're short-term aggressive trader, model doesn't see a lot of momentum above 590. Gamma flip point is right at that 5,900 strike. So as long as we don't have any new negative information, any pullbacks will probably be met with the buy-in from the dealers, right? So 5,900 support number one, and then 5,800, right? This is the gap, the agreement with China on postponing the tariffs, 5,800, right? So this is your support number one, support number two. Right now we're trading at, again, 600 level, that magic number. So 10 points to the downside. If you're short-term, maybe aggressive trader, right? Then I would use 5, 10 points to the downside if you're doing, if you're thinking about hours or days. If you're thinking about weeks or months, if you're holding position usually for weeks, for months, 580, right? 20 points, right? This is, and on $10,000 account, again, $250 is your exposure, right? So if you, on average, our Tradespoon Yellow Tunnel subscribers, the average count is $10,000. 2.5% is $250. This is how much money I'm willing to risk if I think that the market is going to the upside. And the reverse will be if you're bearish on the market, right? But most of the time, most people are bullish on the market. So you do 25 shares, right, times 10, right? So that's your stop loss. This is number of shares. 25 times 10 is 250. And if you're willing to risk 20 points, then this is about half, 12 shares. So that's how you would determine position size. I encourage you to go through all of your positions this way. Expect market volatility to pick up today due to expiration. And then next week, I'm not even sure what the next week news are. We already have inflation data. We have Fed decision. Let's see, erased all drawings. Market calendar. Market is about to open in the next few seconds. What do we have next week? PMI data. So we have some manufacturing data, services manufacturing data that could spark volatility. For now, it's been kind of as expected. Powell testified committee. Assume no new information. We had that decision this week. GDP second revision, maybe, not sure. PC is probably, again, we already have CPI, PPI there. So yeah, and we have July 4th. So I think going into the next earnings season, the next probably big event would be either geopolitical risks, right? We have 90-day tariff on Canada and Mexico. I think that's due in July 9th. So that could also, there's uncertainty about that, and there's uncertainty about big beautiful bill, whether it's going to get passed or not, and in what form, and what would be the debt, additional debt. Is it $2.5 trillion? Is it $4 trillion? So all of that is also being decided, and that drives the market, right? For now, interest rates are, I think, stable, 4.40, right? We're gravitating to that magic number, 4.30 on 10-year yield. Dollar is weak, but holding this double bottom around 98 level. VIX pulled back after the VIX expiration. We jumped to 22. Now we're retracing back to 12. Value stocks slightly higher. QQQ up 60 basis points. Semiconductors up 70 basis points. Their spiders is flat. So again, high beta technology stocks, small caps are leading the market. Your ARK Innovation, your regional banks, small caps are all leading the market. Risk on, along with the Bitcoin, right? And Bitcoin is up 2%. Gravitating toward all-time high around 112,000. And again, SPX glued to the 6,000 level. So we'll see. All right, let's go over some of the trades. So KR after the earnings is up 5%. We do have that position, so let's look at that. So I did sell the iron condor. So now I have to manage the call, right? Because the call is up. So let's look at that level. Manage positions. Let's see, KR. So I have 70 call, right? 70, 72.5 call. I mean, I received 34 cents. It's trading at 27 cents. So I have a choice. I can close for a small gain, right? Or I can wait because it's the game of theta, right? Time decay, right? If we have volatility mark and SPX escapes that 6,000 level to the upside, then we can get to the 70 level, right? So for now, let's put an order to close the 70 call. I mean, 72 have doesn't have, so I would just try to at least maybe break even on calls and keep the premium on the puts. So buy to close. Okay, so let's see, a limit of 17 cents. And again, the option expires today, right? If you look at this trade, I did 70-72 call spread, 70-72 call spread. Desi, welcome back. How are you? Thank you for joining. So I sold 70-72.5 call. I sold 62.59 put, right? So it's an iron condor. I mean, strike difference is a little bit different. So it's a broken wings, right? 2.5 and 3. So I'm keeping, most likely will keep the premium on the put side. On the call side, the 70 strike, right? I'm concerned about 60 strike. So I have to watch basically and see if we can break through the 70 side. Unexpected move, we've seen 4-5%, right? One standard deviation. So it's right within that one standard deviation. And if you look at the positioning, there is a reason why I chose 70 strike, is because that's where the biggest position was. So in theory, right, the question is it going to act as the 70 strike, is it acting as a repellent, or is it going to act as a magnet, right? Because one situation, if you break 70, you can go to 75. I mean, Kroger usually doesn't move beyond 2 standard deviation. But for now, 70 is going to be overhead resistance. So this is one of the reasons I chose 70 strike, because this is where the highest open interest of calls, right? Call wall, right? So if you look at the call wall, right, it's exactly at the 70 level, right? And that will, for now, it will act as the overhead resistance. So unless there is a bullish catalyst, it might not break that level. But for now, it's right at that 70 strike. So we'll see. So that's Kroger up 6%. Let's see. Zscaler is flat for now, up maybe 0.5%, trying to continue to grind higher. So I'm managing that position as well. Zscaler continues to go higher. Let me modify that order. What was the change of price? $10 and forgot to change my price. Just paid $15.50 to $12. Okay, so let's change this to 12. All right, so Zscaler is trading around $10. Right, Zscaler trading around $12. Oracle slightly higher. INQ slightly lower. MPC, so I do have position MPC. MPC is rebounding, right? So escalate in terms of crude oil prices. In terms of crude oil prices, you see that based on geopolitical risk, Iran, Israel escalation. For now, it's kind of neutral, right? Trump administration announced that in the next 20 days, he will make a decision whether they're going to participate in attacking Iran's nuclear facility. So for now, it's flat, right? But obviously, if they do attack, that would be an escalation. Crude oil will most likely continue to go higher. If they don't, if they reach some kind of negotiations and non-nuclear proliferation, then crude oil will go down, and that will affect the market as well. For now, market is kind of dismissing the risk from the Middle East. So that's MPC, right? This is MPC. It tried to break 170 strikes, so I closed half of my position at 170 level. If it's able to break 170, then the next level is 175, right? Again, if you look at the gamma exposure, there is really not much. 170 is your call gamma, right? Call wall is right at the 170. This is the highest concentration of calls. And then if it breaks, then the next level is 175. Not as much gamma, but still there. That's right. What else? Okay. Copper FCX is slightly down, right? Also going through this consolidation after strong rally from April lows. NVIDIA flat. JP Morgan continues to break out, right? I closed the JP Morgan spread. It continues to trade higher. There's not much overhead resistance up until all-time high, well, 280. So air is getting thin, right? We're at all-time high. So this is probably where you want to, if you still have JP Morgan, you want to at least trim your position because we're facing overhead resistance, all-time high. Probably not going to break it until the earning starts in July, right? But we're getting close, probably 3 weeks away from earnings, next earnings cycle. General Electric rebounding, so looks like General Electric is trying to, it pulled back, consolidating. It needs to get above 20-day moving average. So for now, I would use 20-day moving average as the overhead resistance. We know that there is a lot of positioning at 240 strike, right? So that's also, where's my bar chart? Let's look at JP Morgan. So JP Morgan is at 280, right? So you see 280, a lot of positioning at 280 strike, and that acts as also, well, call wall is actually, sorry, 250. So call wall on JP Morgan is 250. So this is the highest concentration of call wall. No, this is not right. Hold on a second. JP Morgan, 280. So it should be 280. But highest concentration is at 250 of calls, but you can still see that 280. Right? But 280 is where the highest open interest is. This is across all strikes. This is just July contracts. Keep in mind that a lot of the strikes are in June and they're expiring. So that's why I removed the June, but the call wall is across all expiration month. So, but for now, it's 280 is your overhead resistance, and potentially I would consider trimming that position. All right, Zscaler, let's go. 308. So Zscaler is trying to break out, but it's having a hard time doing that. Let's see, what else? For now, Kroger is facing 70 strike. Let me look at my position. Give me 1 second. And again, this is a good exercise for view on volatility, right? When you trade options, especially if you're selling these out of the money options or buying out of the money options, which is a very popular strategy, you have to have a view on volatility, right? If the volatility is going to increase, right, volatility rush, or volatility is going to decrease, volatility crash. That's one of the common terms. And this is perfect example where, if you sell in iron condors, you think that the stock is going to trade within that one standard deviation move. If you sometimes, like on Oracle, I was doing a calendar spread or long vertical, then I think volatility will increase. Here, my assumption is when I place the trade that we're not going to break 70 strike and volatility will decrease. We'll see if I'm right. I have a few hours to wait. And then on my personal account, okay. So it hasn't reached, so what did I put order for? 17 cents, it's trading at 24 cents, the 70 strike. So getting close. All right, Desi, buying an option, 1 strike in the money should give us 60 delta. If that underlying moves $1 in the correct direction, it may increase to 72. If the option moves in the wrong direction, the delta should decrease to 50, basically $1 correction here. Moving the option, getting better risk reward based on delta only. I mean, most of the time, if you don't want, minimize the time decay, right, theta decay, you do trade in the money options, right, delta 60 and delta 70. That is the most common approach, and I agree with you, right? I know Keith sometimes doing slightly out of the money options, right, just to get that, take more risk, right? It's a lot of it is risk versus reward. If you're doing in the money options, you're probably looking for less reward, but also less risk, right? Because time decay is on your side. We chose, let's say Zscaler was 310 strike, right? When it was trading at 300, so it was slightly out of the money, but if the stock moves, you're risking less money and higher reward, right? But you do have time decay. So if you want to avoid time decay, you're doing deeper in the money options, right? You're paying more, but you're affected less by time decay. If you're doing, slightly out of the money options, like we did on Zscaler, I mean, we picked July contracts, so shouldn't be affected that much in terms of volatility, but that's the idea. But thank you, Desi, for that statement. General Electric up 2%. All right, General Electric. So General Electric is probably one position outside of Zscaler where it's a July contract. The rest of them, I have another position in August. So now I'm watching July, right? Because the July 18 expiration is not that far away. So right now I am still down, but it's getting better, right? I was down close to 50%. Now I'm was it trading around 250 to 60, so maybe $1.40 have different cost bases. So I'm watching General Electric position, right? That's kind of my next position that I need to keep an eye on. Kinderspiel, type in any questions if you have in stream chat. Usually people come in and they leave right away. And if they stay, they usually stay for a long time, so that's good. But on Discord, we usually ask questions right in that stream chat. So pound stream chat if you want to type any questions. Tag me and I'll answer it. But Cherry Blossom, Hariri Masf, and Rasser, welcome back. All right, any questions on Discord or on GoToWebinar? All right, so GE, let's go through the rest of the positions. You can find them again under Elite Circle on Tradespoon or on Yellow Tunnel, either Dynamic Power Trader, Earnings Power Trader, or Profit Accelerator. Right? Earnings Power Trader is where I trade only earnings strategies like Kroger, KR, right? Like a KR. So you can see all my position and my cost basis and any orders I have to close the position. All right, so let's go over. So first, FCX, copper, still have a copper, it's stock price. I think silver is breaking out, gold is breaking out. Copper prices have been strong. They're consolidating after a sharp rally. I mean, if the market is going to break out to the upside, which is my kind of core my core scenario, I think we're still slowly grinding higher, right? As long as we're above that 5,900 level, the gamma flip, I think market slowly grinds higher, kind of a repeat of past few years and of 2018 scenario. Then I think the risk is when the tariff come due, right? Those tariff delay, the 90-day delay comes due, Canada and Mexico July 9th, and European Union a few weeks later, and then China a month later. That will probably spark the volatility, and I think risk is to the downside, right? But for now, you can see market kind of dismissing the risk and kind of following the momentum. Any questions? Apple is up close to 2%, still underperforming the market. Amazon consolidating, Tesla, pull back, consolidating. Let's see, Google consolidating, so no new signals. Microsoft is grinding higher. Microsoft is one of the stronger stock along with Meta. Meta consolidating, but Microsoft is continuing to go in higher, and I am out of Microsoft, right? This was another spread, so I did get out, or did I not? I'm sorry, I still have Microsoft. My apologies, I didn't get out. So Microsoft is another position that I have, continues to grind higher. It's trading at about $5.60. So the time is on my side. I do have 480, 490 call spread, 480, 490 call spread, and it expires in August, and looks like it's trying to break to the upside. We'll see where we're going to close today. But Microsoft is another spread, but it's August. I have time, right? And I assume that they're going to have a decent earnings. So Microsoft continues to grind higher. Any questions on Microsoft? FCX, General Electric. We talked about General Electric. So I'm watching 230 level. I'll probably get at this point would exit if it drops below 230. But if it is able to escape 240 strike, I think if it's able to escape the 240 level, 240 strike, then I think this move is to the upside. But there is a headline news. They're impacted by prices of aluminum and steel, tariffs, and they're going to pass that price to their clients. So the headline news is not great. GEV, is it a symbol, Robert, or is it a question? Let me know what you mean by GEV, or is it an acronym for something? Oh, GEV stock, GEV. Product manufacturing, let's see, is this General Electric? Okay, this is after the spin-off. I haven't traded GEV. Right. Is electric power industry, spark service, generate, transfer, store electricity, power, wind, electrician. So this is a spin-off, right, of General Electric. Electric grid, energy. I mean, it's strong, right? It's consolidating after a very strong rally in the bottom of April. I mean, similar to GE, I guess. I mean, I do like NEE, right? Nextera in terms of energy. It's more of a utility. CCJ, right? Nuclear energy is probably better. That's what Fred likes. And, it has kind of a tailwind from the additional stimulus package and financing nuclear energy by the new administration. So if I have to pick energy, I'll probably go into nuclear energy because the chart looks the best. And with wind energy, with the new beautiful bill, a lot of these subsidies will go away, right? I have a friend who is in wind energy, and I mean, wind energy guys are not happy, right? If you're in wind energy business or solar, first solar got crushed last week. So if you're in green energy, this is not the right administration. Probably you might have to wait till the next elections. So I would pick probably nuclear energy out of all of them. Any questions? All right, next position. So KR for now, has a hard time breaking through the 70 strike or at the call wall, but we still have expect volatility, and we still have a few hours until it expires. Bid is actually at 17 cents, so I think my bid is there. I mean, still have to wait. So, I mean, you can close it for last price is 22 cents, so you can close it for a profit. I mean, it's not a large profit, but I mean, what is it? 26, 23, 34, 13 cents. I mean, 5% profit on the risk taken, right? I mean, for overnight, I think it's decent. All right, Zscaler is slightly higher. Kroger continues to trade it in 69.70. Oracle is flat. IonQ is flat. MPC, FCX. Let's see how is the rest of the. Let's look at the rest of the positions. So we talked about Microsoft, FCX. What else we have? Kroger, MPC. Right. This is more of a energy play. I think energy has more geopolitical risk aside. I think you can see MPC broke out and trying to continue to grade higher. We had a signal in Valero Energy that's facing overhead resistance year-to-date highs. So energy, I think, could have more room to the upside. So that's MPC, and then what else we have? We talked about Microsoft Silver. For now, silver is consolidating, but it did break out through the multi-decade highs, right? Next, there's really no overhead resistance until, well, I think 35 strike, right? If you look at the gamma call, let's see, where's the silver call wall? So in terms of positioning, whether it's a delta or gamma, largest position is 35, right? So there's a lot of call buying. Call wall is at 35 level. Extreme levels, and we've seen that in silver before. That doesn't mean we're going to get to the 35 level, but at least majority of the people, participants trading options, think that we can get to 35 level. So 10% upside, still have the calls. Silver continues to grind higher. And those are all the positions I have. Any questions on Discord? Happy Friday, Rasser. Hopefully you had a great weekend. Kinderspiel, let me know if you have any questions. So yeah, so you can sign up for Elite Circle or any of the Yellow Tunnel services. Keith and I, we manage a live trading room in both of these services. And you can see all of my orders and all of the positions under Elite Circle. You can enter your phone to get SMS messages. And you can watch the recording. You don't have to be, if you're busy and you don't have time for live trading room, you can always watch the recordings. And you have Keith and I basically covering the live trading room and going over these positions and placing new trades. All right, Kinderspiel, let me know if you have any questions. Rasser, hydrated muffin, cherry blossom. Any questions? Fred, Greg, Lalit, Louis, Mario, Pam, Patrick, Peter, Robert, Ted, any questions? IBT Bitcoin. No, IBT, International Biotechnology. I mean, I don't watch IBB. I watch, yeah, IBI. Yeah, XPI. Yeah, so biotech has been underperforming, right? I think it's still a momentum trading, right? This is a trader's market. This is not a buy and hold market. I think if you just buy and hold, that strategy will not work this year. It might not work for the next, few years, right? Especially with the elevated interest rates, uncertainty, and with the new administration, it's definitely, a stock picker's market. You have to have an opinion which group of stocks or which sector will outperform. I think this is, my personal opinion is the momentum trading, right? It's not high beta trading anymore. It's not, value stocks, but stocks that have momentum, whether it's JP Morgan, General Electric, Zscaler, those are the stocks I would trade, right? Healthcare, industrials, Bitcoin, uh, if the stocks are underperforming, I would stay away from stocks that underperform. I mean, I understand a lot of people do this regression to mean or contrarian view, which is great if you have a 5-year, 10-year horizon, maybe contrarian trades will work. But if you're, thinking about weeks, months, even a year, I would probably not invest into underperforming stocks. Any questions? Thank you, Fred, for that question. I thought you would ask me about Bitcoin. IBIT. And this is momentum, right? And again, if spiders is going to, reach escape velocity from that 6,000 strike, most likely will not do it without Nvidia or Bitcoin or these momentum names. So I mean, still a lot of high correlation between the indexes and the stocks, right? So for now, we're kind of glued to the 6,000 level, and we've been glued to this level for quite some time. So we have VIX expiration. We had VIX expiration on Wednesday, equity expiration today. For now, kind of, it's flat, right? We're not going anywhere. All right, we got to 60.20. We're retracing back. So I think next 2 weeks market will resolve itself. Based on new positioning, it will either reach all-time high, right? Spiders is probably going to get to all-time high. I think that's my core scenario. Or if obviously United States participate in the Middle East war, then I think that would be negative for the market, right? Then the market will pull back. Robert, good advice. Okay, thank you, Robert. I appreciate your kind words. Yeah, I think right now, the strategy is momentum trading. And that's why you can see most of our positions are all momentum stocks, right? It's not high beta stocks. It's just stocks that have been going higher, right? In financials, industrials, silver, platinum. I mean, you can say, European, Germany, Mexico. These are all momentum stocks, so that's where I would concentrate. All right, 10-year yield continues trade in the range, so that's positive for the market. Dollar continues to be weak. Not sure. I mean, as long as it's not making new signals, I think that's positive for the market. If it does break through that 98 level, it might be negative for the market. I mean, for now, correlation is low, right? It's down 10%. Market is at all-time high. So, but a lot of people are watching dollar, and it's in interest rates. High yield is stable, right? We're at almost at year-to-date high, so that's positive. Again, the spreads between junk bonds and treasuries are still stable. Ample of liquidity, right, in repo market. But I would watch the big beautiful bill that's coming due, and I would watch the debt ceiling, right? That could impact the repo facility and liquidity in the bond market. And a lot of people are concerned about the auctions, treasury auctions. For now, you don't see it reflected in the spreads, so I think this is fine. VIX below 20, that's positive. Market flat, spiders are flat. I don't see anything else exciting. Nvidia and spiders. See how some of the other momentum stocks. Materials, right? I think Fred said, or somebody said MP, right? So you have rare earth metals, right? That's sticking point. This is China's, wild card that they're using. And you can see some of these names have a vertical move to the upside. Computing, right? Super micro computing is also has a strong rally. Pelletier making new highs, so that's great. Affirm is doing something right. So still this, some of the financial sector, pay later type of financial, looks strong. Tempus, our friends from Chicago, are doing well. Strong momentum in AI stocks. CCJ pulled back today. Let's see. Schwab is doing so. Goldman Sachs. If you're looking for more signals, I did like the signals today. You have Goldman Sachs, right? JP Morgan Financial, Wealth Management. They're all grinding to the upside. So Goldman Sachs is on the list of signals and making new highs. So I know, John, you like that. Goldman Sachs is grinding higher. Cisco, Oracle, right? Some names that you usually don't find leading the, technology names. Usually it's NVIDIA and Pelletier, but Cisco, more of a traditional, beta, lower beta stocks like Oracle and Cisco are in a strong uptrend. So Cisco was another signal, and Valero Energy. We talked about some of the energy names. Fred, MP is not you, sorry. I don't remember. I think it was maybe Tim. I could be wrong. All right, 901. Where are we? The only stocks that I do have to watch carefully is, well, all stocks I have to watch carefully, but KR is expiring today. So if you have June expiration, the worst thing that can happen is that you get a sign, right? You forget, you get busy, you go and play golf, or you're going on the beach, and you forget to close your position, and it expires in the money, short call or short put, right? So that's where your risk is kind of unlimited, right? So I would encourage you to review your June contracts and close them, either put a reminder or close them now. If you want to be in position, you can roll them. You can roll them into next week. You can roll them into July, depending on your type of trading, but I would carefully review any of your position. So for me, it's KR, right? KR expires today. One thing I don't want to do is to forget about this 70 call. So remind me. Well, Keith is going to do closing bell, but I'll try not to forget and close this trade, whether it's profitable or not. Because if I get a sign on that short call and there's a follow through on Monday, then instead of losing, 5-10 cents, I could lose, well, whatever the amount it rallies, right? So you want to avoid getting assigned on these contracts, right? Or unless you have a large portfolio, you want to own the stock. That could be different, but most of us don't have large portfolio, and one contract would be $7,000. If you have a $10,000, you don't want 7,000 of that. 70% of your portfolio would be now allocated to KR and be on their own side of the trade, right? That's where the risk of options, probably the biggest risk in trading options, in my opinion. So just be careful on anything that expires today. 903, KR is still kind of pinned to that 70 strike. Zscaler slightly high, Oracle slightly lower. NVIDIA turning red. Expect market go up and down throughout the day as people closing their June contracts and rolling them into July. JP Morgan continues to outperform. General Electric continues to outperform. That's good. That's about it. All right, any questions? All right, if there are no other questions, I think that's all I have for today. Guys, thank you very much for participation. We have a good turnout today. Try to be there at 2 p.m. Central. Keith gets upset when a few people show up, so try to make it at 2 p.m. And I will see you guys on Monday. Enjoy the weekend, spend some time golfing on the beach, friends and family, and then we will do this again on Monday. Thank you very much and have a great weekend. Thanks, Robert. Fred, thanks a lot. Thank you, Desi. Welcome back. I'm glad you're able to join us now more often. All right, take care, guys. Beautiful weather in Ireland. Yes, this is one place we can go travel, is Ireland.